afternoon, everyone, and happy Friday. Welcome to Stock Market Today with Alyssa Corum and Ed Carson. On today's show, we're going to go over the action for the major indexes this week. Not too much movement by the end of the day today, Ed, but some key developments this week, and we will get into that. We're also going to be checking in on the charts of Nvidia, Goldman Sachs, and taking a look at the action among recent IPOs. So with that, Ed, if you could kick us off here, let's take a look at the S&P 500 on Think or Swim to take a look at those candlestick charts. The S&P finishing up less than 0.1% here today. Same for the NASDAQ. The Dow up about 0.2%, and the Russell down a smidge. But we do have the S&P 500 back above that 4,200 level, which is an area that we've seen some resistance at. So it'd be great for it to hold that level as it continues its way to highs.
Yeah, that's right. Is because of its candlesticks, it's showing red, even though it was an up day, but it wasn't up much. Sort of a weak close for the second straight day. Had a few of those this week. I mean, after some of the first couple of days, the last few days, we haven't been moving much at all. So rising high or low in the range, not the biggest thing in the world. We're moving closer to record highs on the S&P and the Dow, so that's a positive. And we'll move elsewhere, just to put in the perspective of the week, it was another strong week. I mean, some of the days were not that exciting, but, just a strong week here. And you can see where we had closed near the highs in prior weeks and moving higher here. So, definitely some positives, for the market this week. And the breakouts, I think, in the leading stocks were even stronger than the indexes.
Most definitely. So some great signals there underneath the surface. And now we're going to go ahead and flip on over to MarketSmith so we can check out the NASDAQ, because we hinted at the key developments that we saw this week. And I think a pretty big one is to see the NASDAQ and the Qs, as well as small caps, getting back above that 50-day moving average.
Yeah, this was really important. This was a dividing area, obviously. We'd hit resistance a little bit, and getting back above this is just a real sign of strength. It suggests that the market was getting a little closer to being a full broad market rally. We're still under pressure because you can see we're really not far away from the 50-day line. So we could hit new highs on the S&P tomorrow on Tuesday, or the NASDAQ could go back below the 50-day line. So it's not, everything is set in stone, but it was really a positive sign that maybe, that the S&P and the positive parts of the market are going to pull the NASDAQ up, as it were. And just this uptrend, it wasn't amazing, but just any kind of uptrend instead of this, all of a sudden breakouts start working. All of a sudden, all those things, it's choppy up is a whole lot better than choppy down, even with the sector rotation.
Yeah, so things are definitely moving in the right direction. So very encouraging to see. And let's take a look at the IWM ETF, which tracks the Russell 2000. That too back above its 50-day line, up 2.6% on a weekly basis. So a strong week.
Strong week. I mean, the RS line has been sagging for the Russell, so it's not leading. Certainly not leading right now, but it's not falling apart anymore. That there was a lot of this is sort of reflective of how a lot of leading stocks did, the small caps, down here and then up here. So definitely a more fun time, at least in the short run, for active investors.
Yeah, and you mentioned underneath the surface, some extra encouraging action. And let's check in on Nvidia, a leader of the past, which really, since last summer, has been trading more or less sideways, but it gained 8.4% this week, heavy volume. So is Nvidia really shifting back into gear here, Ed? It looks like over the past 2 weeks, we've seen some really strong action from this leading chip maker.
Yeah, it actually closed it's closed in buy range, and it didn't shrugged off the market pulling back at the end of the day. It just kept on going. It paused for a couple of days, including the day after. This was the day after earnings. So it was sort of a delayed earnings reaction, surging higher here. I think the better place to buy it technically was here, maybe around here when it cleared the, broke above the trend line. But with earnings coming in, that was just really difficult to buy. Yeah. I will note that the last 3 breakouts have flopped, and pretty quickly. It breaks out, and then a few days later it fails. So, you just have to be ready for that kind of situation. After running up pretty much straight up in this kind of situation from here, it wouldn't be a shock to see this pull back. It could be normal. So just be aware of that, in that. So don't, be careful about buying it extended. I would definitely be on the lookout for a pullback.
Yeah, very good to point out that early entry there. We like buying stocks as they're close to that 50-day line and then adding to it on the way up. But let's see if you missed it, maybe it'll set up a handle here. We'll have to see. If it can really reassert its leadership, Ed.
Yeah.
And elsewhere, we want to take a look at Goldman Sachs, ticker GS. And we saw a breakout out of a cut base in early May, and the stock has been trading in that 5% buy range since, but it looks like it is potentially setting up again here.
Yeah, I mean, technically it's still in buy range, in that buy zone. The RS line is at new highs. The growth has been tremendous. Nvidia is that we're sort of used to Nvidia. Yeah, Nvidia's has strong growth, but Goldman Sachs also had a really strong 2020. It's going to have booming growth in 2021. So there's that. But just to make clear, the fundamentals are strong. Yeah, it sort of has a high handle here on a daily chart. So getting above this, or even I suppose you could do a trend line like that. Getting above that would be another entry. And it's actually a 3 weeks tight that was formed, sort of further bolstering, that nature. It was very tight action on a weekly, even though up and down, it had some big swings. It closed nicely and it almost was a 4 weeks tight. It ended up just too much. That's close enough. It's a tight pattern in here. So the same buy point, just over 377, would be another place to start or add to the position.
Yep. Looking at both the daily and weekly charts, as we always point out, is really helpful. And unlike Nvidia for Goldman Sachs, you mentioned that relative strength line pretty much at highs. So we like focusing on the strength, and the relative strength line, which measures price performance versus the S&P, is one way that we are able to gauge that strength. We also have seen a lot of strength and interesting action on the IPO front this week, but IPOs can be very volatile, and UiPath, definitely showing that aspect today, closing up less than 1% for the week after it had been up much more. So reversing lower today after a couple days of trade in the 5% buy zone of this IPO base, Ed.
Yeah, I mean, just sometimes there's a lot to like about UiPath. I mean, there's some strong fundamentals. There's a lot of funds that are in this. There's a lot of support. But you definitely want to only be buying extended, and that's just with an IPO. That is just like whatever we talk about. Don't buy extended. That just goes triple for IPOs because the reversals the sellouts can be triple, and it's just it's nice if you can find an early entry. I mean, you could have used something like this or like this to start a position, perhaps. But in any case, it's just that you try to buy in there and just know that you have to have an exit strategy. Well, where's your line in sand? What are you risking, and where are you going to get out? Because there's a good chance you're going to have this. I mean, IPOs can have great rewards, but there are commiserate risks as well.
Exactly. Yeah. You don't want to go all in when a stock is extended just because you see maybe other IPOs are working really well. Roblox is a great example of an IPO stock that it took a second try after a failed breakout of an IPO base for it to really get moving here. Cricket, an extremely wild IPO, but that has had a very strong move as well. So investors may be thinking, well, I just want to get a piece of this IPO because they can be ultra hot, but as hot as they can be even more wild and volatile and shake you out. And some won't ever come back after their initial couple days to weeks of trade, at least for a while.
Yeah, I mean, that's certainly the case. That's the thing. It's like, well, I'll just buy it. Yeah, it'll go up and down, but it'll go up. No, not necessarily. Some of them have definitely gone down quite a bit, or they have initial run and then they tank and then they would just go down to nothing or down way off that. So, I mean, look, when it gets up here, a stock like this or a Roblox now with Roblox RBLX, now if it goes up and down, it's okay. Because, if you bought here, somewhere in here, you have a big gain and it's not such a risk. But that kind of volatility, it just comes with the territory. You hope that you can get that escape velocity and hold a position. You might take partial profits if you want or whatever, but just knowing that at this point you can hold it. But this kind of situation can happen a lot. This was a big drop. And you just have to be prepared to get out. There's a lot of fun in IPOs, but unlike Roblox, the game, you can really lose.
Yeah, you don't want it to be game over for your portfolio. We, as laser focused as we like to be with all of our buys, especially important to do so with new IPOs and position sizing, as you mentioned, to manage that risk. So now let's talk about our game plan for the week ahead, because Ed, it really does feel like this week there is improvement in overall market conditions. We're not saying it to be gung-ho, aggressive, guns blazing, but the breakouts that we've seen this week, it seems like there's a bit of broadening of strength.
Yeah, there was broadening of strength, and they were working. For a while there, we were having breakouts of all sectors sort of struggle. And even earlier this week, like metals and mining were struggled. But by the end of the week, everything seemed to be generally going up together, which was nice. You got to have those watch lists and have them ready, because you can see with some of these names, you want to get into them as quickly as possible. So if you're not, you don't just want to say, oh, something's breaking out, do I want to buy it? And then it zooms up and why am I buying this one? You want to have that prepared, and you really have to be staying engaged with the market, because if you're missing that opportunities, you just don't want to, in this kind of still choppy market, or at least potentially still choppy market, you don't want to be buying extended. So really, really don't want to be buying extended. So you can maybe hold on, or at least avoid losses when these stocks are going up and down, up and down.
But with the buying opportunities that are presenting themselves, it seems like investors could increase their exposure now. But just because there are more buying opportunities that seem to be working doesn't mean that you can lose that discipline and start, bending the rules.
Yeah, you can't be bending the rules with what you buy. And also, I don't race ahead. It's one thing to incrementally add in as things are working. Oh, I'm seeing gains. I'm going to add a little bit here. Maybe, this sector is working. I'm not very exposed here. I'll add a little bit here. But don't just say, oh, I'm 50% invested. Now I'm going to go 150%, because everything's working and nothing can possibly go wrong. I mean, we could have a bad day and the NASDAQ, it wouldn't be that much of a drop, and the NASDAQ would be below its 50-day line, and we'd be going, oh boy. The market rally, we're still seeing is under pressure. It's under a lot less pressure than, it's just sort of like you got a little kink in your neck, not, like being squeezed in a vice, but it's still under pressure. Still have to watch out for the conditions turning around.
Yeah, and still be selective. We want to be buying the best of the best, and not just any old setup or any stock that's breaking out. We want to dig a little deeper and make sure that it meets a lot of the criteria that we have to help increase our odds of success. You're never going to find a perfect stock, but you definitely want to go through a checklist of things to help make sure at least that trade's going to be in your favor. And with all that, Ed, we'll have to see what next week brings. You mentioned the key levels to watch on the NASDAQ, especially. We have that 50-day moving average. The S&P, it'd be great to see to get that back to new highs. So we'll see what next week brings. I was going to say tomorrow, but it's Friday, and the Friday of the long weekend at that, Ed.
Long weekend. Thanks to all our veterans. I hope you have a wonderful day. And next week, we do know something that we bring. Next week on IBD Live, we're going to have a couple of special guests. So I'm looking forward to that as well.
Yes, we have special guests. So make sure you tune in, investors.com/IBD Live. We're really looking forward to that, a jam-packed June lineup of special guests. So you never know who's going to come. I guess you will know whenever it is officially announced by our marketing team and those guests tweeting it out on social media. So follow along, investors.com/IBD Live. Thanks for watching, everyone. Have a great weekend and Memorial Day. We'll see you Tuesday.